You're welcome to another edition of Islamic Finance Weekly, where we discuss key developments in the non-interest finance market. The fintech industry in Nigeria has grown through leaps and bounds, creating economic value in the country. It has served as an enabler for financial inclusion, supported over 500,000 businesses, and attracted over $2 billion worth of investments. This edition will explore leveraging fintech to scale non-interest finance in Nigeria. And my guest is Salim Yakubu, the Chief Technology Officer, Exchangebox. It is nice to have you on the program. Thank you for joining.
Pleased to be here.
Thank you for joining us on this program.
Pleasure is all mine.
So the first question, how will you describe evolution of fintech ecosystem in Nigeria?
To discuss the ecosystem, the fintech ecosystem in Nigeria, we have to look at history and the evolution of fintech and how it came about. Interestingly, we just had the Nigerian Fintech Week a week ago, and there was a presentation there on that showed the history of and the evolution of fintech. And it clearly showed us that Nigeria has come a long way within the past 20 years, from virtually having the industry being run by traditional banking system and to where we are currently with a lot of smaller units with different licenses from CBN operating to service the financial needs and bring in financial inclusion to the vast majority of the populace. So the fintech is here to stay. It's the next step to extending the banking services to the last mile. So obviously we have a lot to see in the future. New innovations are coming into the space in terms of payments, in terms of collections, in terms of maybe including financial inclusion to the majority of rural areas and the rest. So that's all I have to say regarding the ecosystem as it is right now, and the trajectory we see it happening within the next couple of years too.
All right, thank you, sir. In terms of the used cases, how can fintech leverage to the deepen growth of the non-interest finance in Nigeria?
Okay, that's an interesting question. So the idea of fintech is to layer on top of the little background we have is it's basically towards financial technology, right? It's bringing financial services using technology, and this is what fintech excel. There are a lot of advantages as to why fintechs behave this way, because you have a lot of flexibility, you have a lot of speed in terms of delivery of services and products to the last mile, the end user, as opposed to if you look at a traditional banking sector where you have a lot of bureaucracies to follow before any given service is rendered to the last mile. And if you now couple that with the digital literacy, or rather the literacy level in Nigeria, which has improved by all means in leap and bounds, but we are still lagging behind. We're a populace of 200 million, and we have a lot of people in the rural areas where literacy it's still a bit low. The minimum you get is primary education, and digital literacy it's not even included in those parts. And coupled with a couple of challenges that we've seen across the country in recent times due to security challenges, accessibility, infrastructure accessibility, you find it difficult for traditional banks to get a branch set up. To get a branch set up in any locality, the last statistics I know will cost nothing less than 40 million naira just to set up one branch, without talking about, we're not talking about staffing, we're not talking about remunerations, we're not looking at security, just to set up a single branch in any given location. That burden alone on banks, it's heavy. It's heavy. Now, fintech on the other hand, because of its by nature, its definition, I can be in an office in Abuja, a small one-bedroom office, and I'll be servicing 2 million people, in as far as I have the right licenses to do that, because I'm extending those services via a technology platform. Now, this gives you a background on how financial services are rendered via fintech. Now, how do we marry that into non-interest finance, Islamic banking. Islamic banking, it's a very interesting concept. It's a very, very interesting concept that has gained grounds in the past few years in multiple countries. Countries like India, countries like in the Middle East are into Islamic banking a lot. And it's mainly due to a very simple reason. Islamic banking is, it follows, to use the vernacular, la darar wa la dirar. There is no harm, and that is, you don't inflict harm. So you don't harm and you don't inflict harm. So the idea is we share in profits. We share in profits. So that's the basic. If you drop it down to the basic idea, there are multiple forms of Islamic finance, which includes the mudaraba, the musharaka, the job common ones we see. The idea is you need some sort of financing, and I can come in and say, okay, based on agreements, I can render those services to you based on agreed set of rules, and then we share in the profits also. And we do our risk mitigation to ensure that there are no risks involved, do the necessary thing any other business will do. And then we go into such businesses. The only difference is in the case of disasters that are inevitable and that can be confirmed that, yes, these are natural disasters, right? We now have to also share the risk. But then that is where Islamic insurance come into play also. And then we have Islamic insurance that come in and save people in such scenarios. So the idea of fintechs rendering this sort of services is something that is highly needed, because the majority of the people, especially in the north, which is a Muslim dominated area, and mind you, Islamic finance is not only meant for Muslims; it's meant for anyone that is. It's trying to move away from interest-based banking, the concept of riba, essentially. If anybody of any denomination can decide to opt in for Islamic banking and is welcome to give it a try, there are a lot of benefits to gain from it. So if fintechs can leverage these processes on the fast track speed that they have and extend these services, we are seeing a whole new market, a very large demographic, a whole new potential that can extend services to people that really, really actually need it.
For the exchange box, what are the innovative products that can be deployed to boost the adoption of non-interest finance in Nigeria?
Interesting question. So I'm a businessman. This is a trade secret, but in the interest of sharing information, I've been permitted to divulge the little things we do in Exchange Box to see that we include this. And like I told you earlier, non-interest banking, it's simply a form of finance that try to do away as much as possible with the concept of riba, the concept of interest in its dealings. At Exchange Box, we took that and looked at how do we modify that and offer services that suit that definition. So at Exchange Box is it's an agency banking platform that has its agents around the country. We are nationwide. We have a lot of agents deployed within the northern part of the country. We have likewise within the southern and the eastern part of the side of the country also. Now, being an agency banking network, what we do is we extend financial services via our agents in locations to communities around. So we looked at the structure in which the space in which we play and the structure of our organization, and we felt, okay, look, a traditional farmer wants to buy a bag of fertilizer to farm a piece of land, right? Pardon me, I like to use practical examples because it's easier to convey the messages there and then to everybody to understand. So this particular farmer wants a bag of fertilizer to farm a piece of land, which will happen somewhere in July, and harvest season. We're right in the middle of harvest season, somewhere around November, October is harvest season. So he has 4 months to harvest and sell his crops, but is short on cash. He needs money to do that, right? And to do that now, he has no other option rather than to get financing somewhere. And is trying to avoid riba as much as he can, right? Or is trying to go into non-interest banking. So what we do in Exchange Box is we say, We have an exchange box agent, a my pay rep agent, that's the name of our agency banking platform, pay rep. We have a pay rep agent in your locality. Walk over to him, do the necessary KYC. When we say the necessary KYC, we get to know him, we do the risk analysis, take the documentation that are possible, offer him an offer. So what we do in that scenario, we do something we call more of like, sort of like the musharaka type of dealing, where we purchase the fertilizer on his behalf. Now, the difference between a traditional banking purchasing a fertilizer, it's that we purchase that fertilizer in our name. So essentially, at that particular instance, we become fertilizer suppliers. We buy the fertilizer in our name. And then we tell him, okay, we now have fertilizer as a company. Are you interested in buying from us? Yes. If he fulfills that concept of he's interested in buying from us, we now negotiate a price and we sell to him. Now, it's at our own liberty to now say, pay us instantly, or pay us small, or pay us at the end of so duration. Regardless of what we agree upon, if CBN MPR rate should change within that time period, it doesn't affect our dealings. It doesn't affect our negotiation. It's a traditional sales that happen. Now, the fintech, how did we leverage this Islamic banking at its very, very basic? Now, how did we leverage that at the fintech? We have an agent out there who uses an app, which we now use KYC for that farmer. By just doing that, we've definitely included that farmer into the financial system. Why? We've gotten data from him in terms of his transactions, in terms of his purchases, one, which immediately gives him credit worthiness by just having data that yes, he has banked with, he has engaged in a financial service with a CBN recognized entity. You understand? And then from that angle again, we automatically now say, okay, look, to protect your views, your religious views, we are willing to do this, which we did. You understand, to solve his problem. Now, this has proven to be massively successful. We've trickled it down not just to the farmer, down to the lady that is frying akara, down to the woman that wants to do awara in the north, down to a lot of women are enjoying the benefits of this, because really, if you look at it, they are not looking for 200 million. They're looking for 20,000 naira to just do a small business for a couple of, maybe a month, return the money and we share in the profits of their business. So this is the model we run. Our app is fully designed to support that. You can request, we do our KYCs, we do our checks, and an extra layer of security. We ensure that an agent that is domiciled in your environment, that also now does physical checks and compliances to ensure that yes, we are not running at a loss, and our money gets recovered at when it is due. These are some of the things we do at Exchange Box to facilitate Islamic banking, predominantly the Mudaraba and the Musharaka type of banking. That's what we engage in via the fintech network.
So what are the opportunities for collaboration in the non-interest finance institutions?
You see, the success of any venture, the success of any entity, the success of any sort of union, look, even a country itself depends on collaboration, and that's why we have some things like the UN, we have things like the EU. They're just a collaboration of countries to see how they can prosper themselves each. So obviously, the word collaboration itself is the key to the success of anything regarding business, regarding personal life. Look, I can say marriage is a collaboration, if I'm putting it that way. Now, like I said, I like to give practical examples, and that's why I based this little example of collaboration away from fintech for a while. The thing is this: I'm a fintech company, right? I basically depend on fast technology and dedicated processes to deliver these services as fast as I can to people out there. And the fact that I can extend my services to places where the bank cannot reach means I have an edge instantly. I deal with the last mile customer, right? Now, the banks, this becomes a very interesting point of a juncture where we can meet with the banks and say, look, we have agents across the country in places that are very unaccessible to you. Within that time frame, within these locations that we have, why don't we collaborate, take some of your services that you offer, extend them via our network to those locations. In essence, you are having a branch, sort of a mini branch in these locations to extend your services. So the likes of Jai, the like of Taj Bank, the like of Sterling banks that have an Islamic finance wing, the likes of other commercial banks that have Islamic finance wings, we can consume some of these your services to extend directly, instantly to these people, last mile people. One of the major challenges in service, in provision of services is KYC, because it's difficult for an office that is in Abuja to go all the way to a village in Gwagwalada, for example, to do KYC on an individual. But I have an agent there that lives there, that grew up there, that knows the community, that speaks the language. So imagine doing KYC. It's at the tip of it's that instant for me to do KYC, which I can now provide to the bank to extend services. This is collaboration. Looking at it not from the angle of even extending the bank services, we as a fintech company run heavily on funds. We can look at Islamic finance in such a way that, like I said, I'm an agency banking network. I deploy a lot of POS terminals. You probably have seen one of my terminals. It's called the PayRep terminal. These terminals are purchased at a cost from outside the country. We don't manufacture it here. I need asset financing, which is some sort of a musharaka type of agreement. We could collaborate on this regard. Islamic Bank, you know what, we need to grow our agency network, which will give financial inclusion to more people. But to do that, I need a lot of devices out there. Can you finance the acquisition of these devices, which I will extend, and by so doing, I'm extending your services. So it's a win-win situation for all. So the point of collaboration are numerous, but these are a few that I can give you off the top of my head right now.
What is the outlook for the non-interest finance fintech, especially for the focus on sustainable financing?
So it's the future. I am not going to. It's the future when we get it right. As soon as we get it right, we there's an Indian. I've forgotten his name. There's an Indian that he ran one of this financial tools a while back, and it was reported that he made the highest profit ever in that financial market because it was it was a type of Islamic bond, right? So there was no interest, and everybody participated. A country as diverse as India ran something like that, and imagine the profit that came out of it. So which tells you it's not just a Muslim community that participated there, even the Hindu communities there participated, the Christian communities there participated, telling Islamic finances or non-interest banking finances. Non-interest banking is for everyone, for every denomination. It's actually the future, because you can come to me, you run a business that has 150% return of investment, ROI, a profit of 150%. And you want me to give you seed capital, just funding a capital for you to start that business. And I have done my research, and I know that definitely you make 150% return on investment on that business. Which is better? Should I give you that capital at a rate of 30%? Or should I go into a mudaraba agreement with you, give you the capital and share the profit at a 50-50%, giving me 75% ROI? I don't know if you understand the question. I could give you a loan at 30%, I don't care. Or I could say, okay, look, it's not a loan, it's a business agreement. Here it's the money. Let's go into a mudaraba. I'm giving you the money to do the business. You do the business. I understand the business skills. Your profit is 150% margin. I want us to do a 50-50% split. Look, I want us to do a 60-40% split, which means you take about 90% of the profit. I take about 40 or 60% of the profit. Far better than taking an interest of 30%. So I make more. So obviously, with this kind of numbers, you can clearly see that the future it's better. The future looks steep. That is, I personally feel the growth will explode, and the population is increasing by far. We are definitely increasing. a lot of people are coming into the world, and a lot of people are being financially included, and these people that have been financially included definitely want Islamic non-interest banking. So the future, it looks bright. Right? It's a very bright future for anyone that wants to venture into that space.
All right, thank you, sir.
Okay.
That was all for today. Thanks for joining our program.
Thank you very much. It's a pleasure to be invited to talk.
The prospect of non-interest finance in Nigeria is bright, and with innovative products from the fintech firm suited for the non-interest financial institutions and ethical investors. Segments like agritech and insurtech can be tapped to deepen the market and achieve an inclusive economy. That will be all for this edition of Islamic Finance Weekly. You can log on to our website www.proshep.co to watch our videos and read our news articles. Till we come your way again, thank you for watching.